Some days it's just time to take a look at earnings. That's what's going on right now because we are in the thick of earnings season. I'm Cody from Wall Street Breakdown. I've got my glasses on in the house in the absolute middle of the night. It is pitch black out there. My kids have designed the walls over here. That looks fantastic. That's much better than anything I could do. I'm not actually gonna wear this out. We're doing the earnings call. Let's be real here. Let's try to grow up a little bit. We don't need to be wearing funny accessories in the house while we're sitting at the kitchen table. I think we'd all agree on that, wouldn't we? Yeah, that's what I thought. Okay, so we're going to look at an earnings call from Visa, Amgen, Air Canada, Northrop Grumman, Coca-Cola, Boeing, Freeport-McMoran, and Sprint. So we've got 8 earnings calls. If you want to jump down into the description below and get the actual timestamp from where that specific earnings call you're looking for is, feel free to go down there if you want to ride with us through all the earnings calls. I say hitch onto the wagon. We are going to get started. We are looking at earnings calls from today being October 25th, 2017. And we're going to start it off with Visa earnings per share of 90 cents, beat the street by 5 cents, revenues of $4.86 billion, beat the street by $230 million. That's up 14.1% revenue year over year. That is a pretty good number. I have some flowers here, I notice. It's really building some ambiance, isn't it? You want to keep the flowers here? Why don't we? We'll keep the flowers here. So Visa, actually, the growth is outstanding at Visa. It's a great company. I mean, they're trading, it's high already. They closed the day $109.49. That's up 1% on a good earnings call. What was a really good earnings call and a down day for the Dow. But payment volume growth up 10% at Visa. Cross-border volume growth up 10% as well. Total transactions up 13%. They're up 40% year to date already, Visa, and the analysts are still considerably bullish. They're saying comparisons between companies like PayPal or Square to a company like Visa, there's just no comparison to be had. So when you hear those comparisons out there, I mean, I would tend to agree. I mean, Visa is just, the reach that Visa has is it's not even comparable to by MasterCard or American Express, let alone some of these other online or, like different type of payment systems that have popped up in the last 15, 20 years. Visa is far and away the leader. Is a heck of an earnings call, heck of a strong company. Again, up 40% year to date. Licensed professional financial advisor, like you want to be able to smell the roses. There's no actual roses in there. I don't think, oh, there might be a rose in there. Anyways, you want to be able to smell the roses, the fruits of your labor. So you definitely want to do the due diligence. That's what we want to get down to. So while Visa is an excellent company, they are riding fairly high as far as the price goes. So please, if you're going to get into Visa and you're not already in it, I would say do the due diligence pretty hardcore. Sit down with your licensed professional financial advisor and see if this fits into your portfolio. Otherwise, if you already own Visa and have been on the way up with them, you probably took a little bit off the table at some point, but Visa's still a really strong company. If you're already in it, I'm definitely not telling you to get out of it. Amgen reported earnings today. Earnings per share of $3.27. Beat the street by 16 cents. Revenues of $5.77 billion, beat the street by $10 million, but that's off 0.7% in revenue year over year. Amgen had a really tough time with some of their big drugs this quarter. Repatha, Cripolis, Prolia, they all did not move near the kind of numbers that I think Amgen was hoping they were going to move. And total sales just of all Amgen pharmaceuticals was down 1% in the quarter, and that's not a good look. So while the EPS beat pretty considerably, we've got revs down year over year. We've got a bunch of drugs that are supposed to be doing a lot better sales than they really are. Amgen closed the day at $177.50. That's down 1.59% as the market agrees they weren't feeling this earnings call whatsoever. And I can only imagine there's going to be a little bit more blowback from a lot of the other investors in Amgen later on who are going to say, we were expecting a lot more out of a lot of these drugs, and you're just not producing the type of numbers that we thought we were going to see. So Amgen's probably going to have a lot of explaining to do to shareholders if these numbers continue. Moving on up here in Canada, one of the big airlines, Air Canada, reported earnings today. Earnings per share of $6.44 a share. Revenues of $4.88 billion. That's up 9.7% year over year. They closed the day at 2032. That's down 2.36%. That was pretty much the earnings call that I got. I mean, I know there was a little bit more information that I saw out there, but I mean, Air Canada they're a good enough company that I'll give you the headline news because I'm a Canadian, but if you're going to be involved in an airline, I would say probably first and foremost, you have to be pretty well invested before an airline's probably an individual purchase that you're going to end up making, whether it's a hometown purchase, which would be in this case for me or not. Airline maybe in a basket of stuff, fine, but an airline in and of itself, especially Air Canada or almost anybody, when you consider the aerospace industry, when you consider the alternatives to get into that would touch on those, there's your earnings call from Air Canada. Northrop Grumman, a much better company than Air Canada, I would say, if you're really interested in making money over the long term. It's a much stronger company in a much stronger sector. Earnings per share of $3.68, beat the street by 76 cents. Revenues of $6.53 billion, beat the street by 200 million, and that revenue number is up 6% year over year. Some of the segments at Northrop Grumman up significantly. Aerospace up 11%. Missions up 5%. Technology down 1%. So we've got a bit of a pullback there. Northrop Grumman trading at $304.75 to close the day. But that was up 3.65% as the market loves it. It's a great company. I mean, we go through the Lockheed Martins and Northrop Grumman, United Technologies. I mean, these companies, these are very, very strong companies. When you consider a Republican government, I'm going to move my flowers here. When you consider a Republican government in control, the constant need for a country like the United States, and good for them. I like the United States. I'm not one of these haters. I love you Americans. You guys are my boys. I love the capitalism. I love freedom. I'm down with America. Don't get it twisted. But America in control by Republicans, constantly in need of being in control of the arms race around the world, being a superpower, and obviously they should be. America's a fantastic country that I think goes in and does nothing but good for the most part around the world when they try to do a little bit of governing outside their own borders, but some of that has to just be done. I mean, but to not get off topic, I think companies like Northrop Grumman, companies like Lockheed Martin, United Technologies really, really benefit from that, and they're so entrenched with the federal government in the United States that it's tough to bet against them, is it not? When your economy is doing as well as it's doing, there's money to go around, and when you've got a Republican government as opposed to a Democratic government that might be a little more willing to spend on defense, you end up benefiting. You could benefit pretty well here in this case. So I'm definitely pro all of these companies, all the defense companies. Again, licensed professional financial advisor, do your due diligence, speak to your own guy. This is me just giving you my behind the shades opinion here. But Northrop Grumman, heck of an earnings call, heck of a good company. We move on to another company with a good earnings call, Coca-Cola. Earnings per share of 50 cents, beat the street by 1 cent. That's revenues of $9.08 billion. That's a lot of Coca-Cola. Beat the street by 240 million, but that's down 14.6% year over year. Organic revenue grew 4%, and they've got a really wide performance gap still between Pepsi or Dr. Pepper Snapple or Monster or any of the other major beverage companies out there. So it's not like, well, Coca-Cola, some of the revenues came off, that in that industry, they don't still dominate by a significant margin. So you have to kind of take it for what it is. Is it a matter of people just maybe in the Western world's becoming a little less smaller pop consumers, soda consumers than they were before? Maybe it's a health conscious decision. Maybe it's just a matter of of people, venturing off into a lot more stuff as more options become available, but still Coca-Cola leads the sector by a significant margin. So while revenue's down 14.6%, you still get organic revenue growth up 4%. And again, the gap between Pepsi or Dr. Pepper, Snapple, if you're picking one out of a basket of guys there, you're definitely looking the best of breed when you're looking at Coca-Cola. And it's been like that forever. It's been like that forever. It's a fantastic company. Earnings from one of my favorite companies, one of the world's favorite companies, I would imagine, the company that's been making nothing but money this year, and basically the one that's been carrying the Dow to all-time highs over and over and over again on its back, the best performing company in the Dow this year, Boeing. Oh yeah, always in the news. We cover Boeing so frequently here at Wall Street Breakdown, but I love it. I love Boeing. They're a little controversial. They're a little brash. They come out, they say what they think. I appreciate the transparency that Boeing brings to the table. I'm down with it. I'm down with Boeing. Boeing, tell me what you're doing. Earnings per share of $2.72 beat the street by 6 cents. That's not bad. When you've got a company like Boeing that's being covered as aggressively by every analyst in the free world, and you're still beating expectations. And they're ramping up Dreamliner building. Everything is being pushed and ramped up significantly at Boeing all the time. So to be consistently beating while letting everyone know you're still ramping stuff up all the time. I mean, Boeing is an impressive. It's an impressive company. Probably one of, if not, man, I would have a tough time telling you I find one company in the world more impressive than Boeing. I'd have a tough time. There's some out there. There are some out there that if we really got into other topics, I might argue, because this complete sector separation between, and just how much each company might dominate what they do, but Boeing in and of itself, man, maybe one of my favorite companies. Revenues of $24.3 billion, that beat the street by $380 million. That's up 1.7% year over year revenue. Commercial airplanes down 1%. Defense, space, and security down 5%. Global services, though, up 2%. Commercial planes booked in this quarter were 117 with a backlog of 5,700 and 474 billion in value. That's a lot of backlog. Man, people really want your product. 11 million shares were bought back in the quarter and $900 million paid in dividends, not to mention, in this quarter and in a bunch of the previous quarters, Boeing has taken off like a rocket. So just shareholders in and of itself, not to mention the dividends they've got, shareholders have made a mint in Boeing recently. And Boeing continues to impress, while that individual earnings call, not blowing it out of the water. You can't win them all the time. They're down in a couple of segments that, I mean, everybody would like to see them up and cover, the gamut and be, up at everything. It's just not feasible quarter over quarter. Great company, strong all the time. Hard to bet against when you dominate a sector so vigorously and people need your product. So you're the best and they need it. That's Boeing. That's why they're up so much this year. Freeport-McMoran reported earnings per share of 34 cents, beat the street by 3 cents. Revenues of $4.3 billion, beat the street by $220 million. That revenue number is up 10.8% year over year. That's pretty good. Full year operating cash flow is being estimated to be $4.3 billion now, and that tops the original estimates of $3.8 billion. So that is a significant jump. All these estimates, though, are based on the marketplace doing about $3 a pound for copper, $1,300 an ounce for gold, and $8 a pound for molybdenum. But that's, it's been working for Freeport up until this point, but when you're given estimates and you're given it on that fixed dollar amount, we all know that just like anything else, every market changes. So these commodities, they can change price very, very quickly. things can go one way, things can go another. So while Freeport's doing very well in that right now, it's a good earnings call. Closed the day at 14.70. That was down 3.48%. I mean, people obviously aren't overly sold on this. I thought the earnings call was good, especially the full year operating cash flow being estimated to be 4.3 as opposed to the 3.8. That's a big beat. So that's good, strong guidance. But it's just the commodities can shift so quickly, and we've seen that over so many years, so many different times. All these companies that their main money is getting that commodity out of the ground, and Freeport-McMoran can find that they invest XYZ number of dollars trying to get it out of the ground, and by the time it goes to market, they could have already incurred a loss or just be a break even. So it's a tough racket. It's been a tough racket for a long time. Freeport-McMoran definitely one of the bigger boys in it, but it's a tough racket to win in. It's a tough racket to win in consistently all the time. Finally, the last earning call of the day, Sprint. That's right, big telecom company Sprint. They are going to merge with T-Mobile. There's just no two ways around it. There's no guidance. There's no none of that. They're just keeping it all hush-hush because we all know what's going to happen. There's going to be this conjoining of number 3 and number 4. And we're going to see number 4 get some of their rights taken away by the FCC. That's for sure. We're not going to see T-Mobile be able to do the aggressive advertising and stuff to take customers from Verizon and AT&T that they've been allowed. So that's going to change for sure. And that's if everything goes through. And we imagine it probably all will. Sprint and T-Mobile are definitely preparing for it to go through. Sprint, earnings per share of -1 cent, beat the street by a cent. They thought they were going to be off by 2 cents. Revenues of $7.93 billion, missed by $140 million, and that revenue number is down 3.9% year over year. Their net loss, though, declined significantly to $48 million. I mean, that sounds terrible, right? Their net loss is $48 million, but when you consider that their net loss a year ago was $142 million, they're actually doing quite a bit better. I mean, they're still well valued over T-Mobile, despite the fact that they've been going through some trying times recently. Let's just put it that way. Postpaid ads, 279,000. That's the 9th straight quarterly gain. So that the postpaid ads are going up, and 9th straight quarterly gain. That is really significant number. That's the more contracts you've got, and that's ultimately the ball game here with the telecom industry, right? You want to get as many people hooked up in contracts under your name as you possibly can, because then you can basically forecast how much money you're going to be making, save for the people who buy those contracts out, and they still end up having to pay you a fairly decent grip of money. Prepaid ads were 95,000 as opposed to 449,000 lost last year, so a gain of 95,000 as opposed to a loss of close to 500,000. So Sprint, while they aren't killing it in the revenue and earnings per share department, the growth is still taking place, and it's taking place on a pretty good scale in comparison to even where they were last year. So they're going strong growth-wise going into this merger with T-Mobile, and we know T-Mobile has been pumping out great quarterly earnings just every quarter for a while now. They are storming to number 4, and I mean, this merger is definitely going to shake up the telecom industry if it goes through. We'll just have to wait and see how it all plays out. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, click the notification bell, leave a thumbs up for this video, and leave a thumbs up for all the videos. Why wouldn't you do that? And leave a comment. We love hearing from you. And we want to know what you think about all this stuff. Your opinion's important to us. But most important, you have yourself a fantastic day.